Aloha, my friends. I'm going to test out something a little bit different regarding making videos for selling cash secured put options, because I truly believe in 2023, if you have an internet connection, bank account, and spend money at least once a year, then you really have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own, especially if you're not consistently making money in the stock market as it is. At the 1 minute mark of this video, a link will pop up here to a different video that gives you 5 reasons why I really believe you should be doing this. This is the first time I've made a video like this, so we'll test it out, see how it goes. Ideally, can kind of continue to have it going as an ongoing event so you can watch it unfold. Let me remind you that right here, right now, that link is at the 1 minute mark. It's easy for you to remember, so go ahead and watch this video all the way through, and then go back and watch that. And feel free to check out all the different things over here at ihavesuccess.com, free stuff, paid stuff, see if anything fits your fancy. Right now we're looking at weekly charts, so 6 months. We got 6 month trading time frame. Each of these red or green candlesticks here represents 1 week of information, and we're basically looking at 12 sectors of the stock market. I'm going to quickly just go through here on the weekly chart and look for something that we might consider selling cash secured put options on. Why these? Because there's kind of less research that needs to be done, and to be quite honest with you, none of this is financial advice, but I feel like if we're using stocks by themselves, stocks of companies, then maybe it's a little closer to financial advice, where this is definitely for training purposes. So right here we see the XLF, which is the financial ETF. It's pulled back down here, so this is probably going to be one that we're taking a look at selling a cash secured put option on. XLK and XLC are more on the technology side, communication side. That's had a run up. Also our XLU, let's look at XLF and XLU, right? So what is selling a cash secured put option? The cash secured part means you have money in your brokerage account to handle the commitment. What is the commitment? The commitment is, let's say, for example, if we wanted to, let's look at XLF first. The commitment is we are going to sell a contract into the stock market. For example, this one has 2 days left, and we could sell a contract into the stock market. Like, for example, right here it says at $31.50, we would be willing to buy 100 shares of XLF at $31.50 for the next 2 days, right? So even though this contract ends in 2 days, tomorrow we could, in theory, be assigned during American style options. European style options assignment can only take place upon or at expiration, after expiration, something like that. But with US style options, even though generally speaking it's going to happen after expiration or upon expiration day, it could, in theory, you could be assigned earlier. So that's the commitment, 100 shares, right? So do you know what what 100 shares is? Well, if you don't, you open up a calculator and you go 3150 times 100. So theoretically, if we wanted to sell one cash secured put option at this strike price on this ETF, we would need $3,150 in our account in order for it to be cash secured. Now, if we don't have this, let's say in our account we have this, we might still be able to sell this, but then it's not cash secured. And what this website is about is cash secured, right? So we're not looking at what's called naked. That's when you don't have the money to fulfill your obligation. So now we got a general idea, very general, right? Check out if you want to have a lot more detailed information, check out this playlist right here, 5 videos. It'll go through a lot of stuff. But what we're doing right now is less about explaining detail and more about putting some trades on. So let's take a look at, we're going to go over here. This is what I have this set up as my standard charts. I change it around from time to time, but overall, I don't look at it like this. I don't look at it all at once. Right? I look at it one at a time, but it's got a variety of things. So just to quickly let you know, this is volume profile at different time frames. I don't always look at all the different time frames, but depending, sometimes I might. This is a cone of probability. I like to look at that. These are all what I would consider the major moving averages. This is a monthly chart for 15 years. This is a weekly chart for 5 years. This is a one-day chart for 1 month. This is 1 year. This is a one-day chart for 6 months. I kind of flip back and forth between these, but this is one I look at quite a bit. It's got the 200-day moving average on it. And 5 days, 1 hour, 2 days, 15 minutes, and 1 hour. So for what I'm going to do right now, a lot of times what I'll do is I'll start by looking at a bigger picture. So I'll take a quick look at the 15 years of data on the monthly chart. It doesn't necessarily have to be 15 years of data all the time, but it's like I want to get a big picture of what's going on. All right, so what do I see right here? Right over here at the 20. Okay, oh, look at that. Look at right here back in 2008. Look at right here in around 2019. In 2019, touch that same point in a very similar way. Resistance on this side, support on this side. So what do we got going on right now? We're kind of between 30 and 35 range. I know it's a little bit above that. And we see the next thing around here about 40. We see at this 30 mark, it seems to be pretty powerful. So just by quickly looking at this, I'm thinking about maybe selling somewhere 30, 28, 29, somewhere in there. Maybe that we can get some premium in there. But let's look at the weekly. All right, we see touching same thing. Now, what's the difference here? This is just this candle right here contains 4 of these. 1, 2, 3, 4. Right? This one is the new week, Monday. So it's just giving us a more detailed breakdown. Pardon me. Okay, weekly. So, all right, you kind of more detailed. So we see it's a little over 35. It's really more at 36. 36 is more of this resistance through here. If it's on the other side, probably going to be support. But about 30 to 36. And now we're looking at a daily, 1 year. And we see overall, okay, it's got as high up here as 37, right? So 36, actually, we see a little more detail of 37, and still looking pretty good at around 30. Then let's do this real quick. Let's take a look at all these different moving averages. Okay, so we got, you see we got a 9-day moving average. We got a 20-day moving average. We got a 50-day moving average. We got a 100-day moving average. And even though you don't see it on here, this red one right here is a 200-day moving average. And we see overall that it was below all these moving averages. It's kind of moving up. It's over the 9, kind of battling the 20, but it's definitely away from the 200. So again, I think selling let's see what we can get at a $30 for a $30 cash secured put option. What I like to do in the beginning is take a look at what's the least amount of time I can sell to get an idea of what I would get, the premium. Also, let's do this real quick also. Oh, that's not on there. Okay, I got to do it this way. Let's see. Pull this up. Let me just throw this on here real quick. XLF. All right, so implied volatility 25. So that's relatively low, right? If you see this one right here, Oh, that's a VIX. You see, let's see, Tesla, 66.6. Interesting. The company of the man that wants to put microchips in people's brains. Okay, but you know, there's a 9 on there too. So you got the little bit of Pisces sign going on, but you definitely got the potential evil sign with some guy that's running a company that wants to put microchips in people's brains. I don't know. You can make of that what it is. Like, obviously, I can't rig these numbers right here. It just happen to work out that way. So I think it makes it kind of comical. You might not think that comedy is funny. Hey, to each their own. Some people like romantic comedies. Some people like spoofy comedies. Whatever. So this is the point here. Implied volatility. Take a look at the implied volatility. The higher this number is, normally the more money you're going to get, the more premium you're going to get for selling this option. So 2 days, that's not going to be anything exciting. 10 days, what could we get? Okay, 8 and 11 cents. Now that's not super exciting. Ooh, not even, that's at the 30.50. That's not even necessarily super exciting, right? Wouldn't you rather get like $100, something like that? Well, sometimes that's the way the game goes. And if we were to do this, what would we be doing? We basically, if we sell the $30 strike, that means we're willing to buy 100 shares per contract of XLF at $30, regardless of how low it's going. 100 shares. So we're looking at $3,000 per contract that we would need to have cash in there. So let's just do it. Before we're gonna do that, let's do that. And before I actually pull the trigger on that, let's take a look at this cone of probability. Oh, what time? Do we want to do 10 days? You know what? Just for training purposes, just for fun, let's just do 10 days. So this trade is going to end quicker and we get to see what happens. Oh, something else I should point out to your attention. All right. So this is the bid, the lower number. That's what we're going to, what we potentially, when you're looking at these two numbers, the bid and ask, if you want to know which one you're going to buy at, which one you're going to sell at, you're going to sell at the lower number, right? It doesn't mean that you can only take 6 cents, and I'll get to that in a moment. But the delta is 8. And when we're selling options, we can use the delta as a quick and dirty gauge to give us an idea of how likely it is for us to get assignment. How likely is it for this stock to be under $30 at the end of 10 days, contract expiration date? Well, it has roughly, by delta math, it's got an 8% chance. You got about an 8% chance of getting assigned on this. Now, this is not completely accurate, but it's good enough to gauge with. Open interest, okay? There's a fair amount of people that are transacting in this particular option, and 46 actually happened today. Now, today the highest price it sold at was $10. All right, it's not even on here, but the highest price that it traded hands was $10. The lowest price was $6. So if it's basically, with this type of option, right, a put option, as the stock price goes lower, let's take a look at the hourly chart, right? Way down here is probably when it was getting about $10, right? When it dropped down here towards 32. But look at 30 is not even on this. So what we'll do is we'll do a test of maybe 2 contracts, but we got to figure out the date. What date? Oh yeah, we're going to do 10 days. All right, so 10 days. This is going to expire on the 14th, April 14th. So let's look at this cone of probability real quick. All right, we got to set this up. Boom. Okay. Now down here is the date, right? So I'm going to move my little crosshair. Okay, I'm on the 14th. You see that right down there? Putting on the 14th. Now, oh, I can already see it. Look at this. It's not even, boom. It's outside of the cone of probability, which is, I think, on 1 standard deviation. I think this cone of probability, you see right here, it's set up on that 68, is it 68% or something like that? I'm not sure, but I think that's a 1 standard deviation. I think that might be how it goes. As you see, as you go out in time more, the price it could go gets wider. So, the delta was about an 8% chance that we would get assigned. It's a relatively low probability that we would get assigned. If we wanted to get assigned, maybe we would move up a little higher. Me personally, I like to sell at the price that I want to buy at. So so we're just doing some training here anyways, right? Just kind of going through it. So we're going to sell 2 contracts. One, we click on the sell, the bid, right? You see it's on 6. I'm going to move this up to 10 cents, right? And look at this right here. Natural, mid. Bring it back down to 6. It shows you, okay, the mid is even 6. Whatever the natural is, you're going to get filled really, really quick. The mid, you might be able to get filled. It's more likely you can get filled. But the tighter the spread is between 6 to 7, right? That's a pretty tight spread. That's what you want to see. It's called slippage. Right here, the slippage is higher from 8 to 11. But the way that I'm selling these options here, this slippage isn't going to matter because I'm not going to buy this back. I'm going to let this expire. It's either going to expire worthless or it's going to expire in the money. I'm not closing these out. So for me, when I'm doing this particular strategy, I really don't care about that, any slippage right there. I don't care about that spread. So sometimes though, if I want to sell at the mid, I can just pull this over here. But we're going to go above the mid. We're going to go at 10. All right, we're going to leave it at limit order, meaning that we want to get filled at 10. We want to sell this contract for 10 or higher. And we're going to switch this to good till cancel. Send and confirm. All right, it's telling us what we're doing basically. I'm going to quickly switch this, put it over into, just put it into, okay, I'm going to put this into open orders. All right, and showing us what's going on. It's tying up $420.50 of buying power. Now, that doesn't necessarily mean that the amount of buying power that it would tie up for you is going to be exactly the same. Your account may be different. But here's the big thing, right? The big thing is we're making a commitment to sell basically insurance on XLF for the next 10 days. This insurance policy is going to expire April 14th. And we are basically making a legal commitment to buy 100 shares of XLF at $30 per share. If we get filled, then we will be legally obligated to do that on or before this expiration date. All right, the buying power effect, take in $10 of credit, assuming we get filled on this, minus 65 cents commission. And this would be our net profit before tax. So let's send that off to the market. The market's not open. We're in 8:39 p.m. Hawaiian Standard Time. So we're definitely got to see what happens tomorrow. Now let's do another one. I'm going to go through the same thing, right? You saw I clicked under the bid. Now if I click on here on the ask, watch. The order form pulls up green. Buy. Right? So if you make a mistake and you want to sell, you can just click down, boom, 0. Now it takes it off, right? It says unknown, boom, -1 goes to sell, right? So it's not the end of the world if you click the wrong thing, right? Boom, there it is, -1. I can still change this up to sell if I want, or, all right, so we're going to sell that. In this one, we're going to do a little differently. We'll bump this up to, we'll just do it at $7, right? Now, if I was in my real account, maybe I'd go for 8. I don't know, but this is just to kind of help some people out that may be trying to figure out how to sell cash secured put options in their account. And again, I'm going to change this over to good till cancel, which the reason why I'm changing over to good till cancel is because tomorrow, if I don't do that, if I leave it at day, tomorrow when I check on this, if I check on after the market's closed, then this order is going to disappear. And I don't want that order disappearing. I want to be able to adjust it manually. Plus, I want to be able to make a follow-up video and show you, my fine friends, what had happened. Okay, we see the same thing. Really the only difference is maybe it was a little change in the buying power effect. Which basically buying power, you see it up here. This is how much like option trades I can do, stock trades I can do with that dollar amount. To understand your buying power is pretty important. It's really important actually. But if you're sticking to selling cash secured put options and then doing the wheel strategy, if you don't know what the wheel strategy is, you got to check out the playlist on my website, ihavesuccess.com. And when you're sticking to that, you're not going to have to worry about buying power too much, because you're not taking obligations on that you cannot financially afford to fulfill. So you should be good as long as you're doing that. Okay, I'm going to put that, yes, in open orders. And so the big thing, $7 minus 65 cents for the commission leaves me with a credit of gross credit before tax of $6.35. So we'll see what gets filled tomorrow. Don't worry about those. All right, we got here under open trades, right? And obviously I am using Thinkorswim paper trading. If that's not obvious to you, right here, right? Simulated trading. So if you ever see someone making some video on YouTube and you're not seeing this area of their screen, then maybe they're showing you the real account, maybe not. And I don't know where other trading platforms have their simulated stuff, but I'll tell you what, if you haven't learned by 2023 that people lie, then welcome to the real world. Sorry to break the news to you, but yeah, people lie. So simulated trading account, and we see the underline right here, which underline means the underlying asset that I'm selling this option on, or buying the option on, in this case selling. Hasn't been filled, so everything is all zeroed out here, right? Except for a little bit right there. And this mark is showing you the price, kind of like the potential trading price of the actual stock, and right here of the option. This shows us, by clicking on this shows us our two orders. Okay, we're trying to sell one for 7 cents and trying to sell another one for 10 cents. In order to get filled at this 10 cents, stock's going to have to drop down a bit. How far would it have to drop down? Since it sold at 10 cents today, it would probably have to drop down kind of close to the area that it dropped down today. Or maybe even a little further, because there's a certain amount of time decay in there. What's the stuff about time decay? Well, options are made, the value of an option is made up of a few different things called the Greeks. With when you're selling cash secured put options, you don't really have to worry as much about the Greeks, but it's just something good to know, that the beauty of selling is that time is on your side. Time is on my side. I'm not giving up my day job. Right? So time is on your side, just like that whoever sang that song originally and did it much better than me, as they said, time is on my side. Because you're selling car insurance, right? Every day that goes by and you don't crash a car, that works out for the car insurance company, Geico or whoever it is, Prudential, State Farm, whoever sold you that put option on your car, right? In this case, you're the insurance salesperson. So it'd probably have to drop down somewhere around here, and let's just see what happens. You got any questions for me? You can leave a comment on this video. You can go over here to contact us, and I'm just going to be quite brutally frank and honest with you that yes, I want to make money from this, but you know what? I've spent the last about getting close to 20 years of my life mastering the art of selling to people face to face. So for almost 2 decades of my life, I have become really, really good at closing sales from when I'm dealing with problematic customers, when I'm dealing with hard, difficult to deal with people. Face to face, I can deal with difficult people really, really well. But you know what? Even though I could deal with difficult people really well over here online, I don't want to do that, right? So I'm just going to be really upfront with you. Yes, I want to make money, right? If you look at the price of this, it's like $3,000. I want to make money. If you don't want to pay $3,000 or you don't want to have anything to do with me, I don't really care. I'm not going to treat you like I would treat someone face to face selling. Why is that? Because I don't need to, right? I want to make extra money, but I'm never going to have this endeavor be something where I got to kiss butt to people that I wouldn't want to hang out with. So that's kind of my requirement. Like if you come with some sort of a comment or question and some sort of mannerism, and I think like, man, this person is just a D-I-C, insert the last letter. If I'm thinking that, good luck. Do your thing. You do you. I'm going to do me, right? Yes, I want to make money, but at the same time, in this endeavor, I don't need to deal with people I don't want to deal with. So just please keep that in mind if you really have any interest of having me help you, right? Treat me the way that you want me to treat you. So you come at me harshly, I might ignore you. I might make fun of you. I might answer your question. I don't know, right? You treat me with respect. I will go out of my way to help you. You guys have a fantastic day. Aloha.